RBI has recently imposed new compliance rules for all retail and MSME lenders, which is the key fact statement. Can you explain what exactly is the key fact statement?
Sure. So it's a very important point that you've talked about. See, today any loan in the lending space is actually a contractual agreement between the lender and the retail customer. Now, this contractual agreement talks about two things: the amount of loan that the customer is seeking and the rate of interest at which the lender is going to give the loan to the customer, and for a particular tenure. Key fact statement talks about those key statements in a particular loan agreement: the amount of loan which the customer has applied for and which the lender has actually agreed to give, the rate of interest at which it has been given, the tenure at which the loan is going to be given, the equated monthly installment every month, and also the lookup period for any repayment or prepayment procedure. Now, these are important points for any loan transaction. That is exactly what key fact statement is actually all about. It's about highlighting the key material that I just talked about, that is being presented so that both of us are clear, the lender as well as the customer, in terms of the agreement that they have agreed to sign across.
Can you explain its significance in the lending process for retail and MSME loans?
Okay. See, in the context which RBI has now taken up this particular topic, this has come from those number of cases which has appeared now in front of RBI, wherein customers have been telling the lenders, stating that they have not been explained the terms of the contract. It was never given to them explicitly, and which is why RBI didn't want to keep it for chance. They wanted to make it clear that the key factors need to be really explained correctly. The customers need to know. The objective is to make sure that there is no case that is getting contested later on. It has to be smooth. Terms of the agreement explained and terms of the agreement agreed by the customer. So once this is established, once those key factors are explicitly shown across, the customer then cannot come back to the bank and say that, okay, it was not explained to them, because it was very clearly written down and applied for, and based on which the customer has gone ahead with the agreement.
How does KFS enhance transparency in loan agreements?
If you look at any loan contract, okay, most of it is filled with pages of different clauses and different rules. But the most important thing is the ones that we mentioned earlier: term of the agreement, loan amount, equated monthly installment, the rate of interest, including the rate at which the rate of interest is going to change, the term of that particular loan, and also if there is a possibility for prepayment, when it can be done. So these are key factors for any loan contract. So when this is explicitly shown across, all other clauses can be managed, but these are the main clauses which can cause an issue later on. So when we are getting into this, when we are making it so clear, the terms of the contract become very clear, and then there is no issues pertaining to it later on.
What specific issues or gaps in the current system does it address?
So there are many institutions which gives you loan, right? There are banks, NBFCs, microfinance, MSME. Banks, NBFCs, largely they've been doing this business for a very long time. So they have honed these practices. But there are new age fintechs, there are new age companies, new age MSME or microfinance, where they have now started lending to customers, but they have not really made the entire process transparent. Now, which is where this particular point is being raised by RBI, stating that, okay, to make sure that everybody is in tune with what RBI is looking for, so that we don't spend our time trying to contest and trying to figure out who's in the wrong end, whether it is a bank who's actually not explained to the customer, or whether it's the customer who's actually trying to take the bank for a ride.
What kind of changes will financial institution need to implement to comply with KFS rules?
So this time RBI has actually laid down certain principles in a very simple manner. First, it should be easy to understand, which means it has to be in a language where the customer can understand. Second, there is a format which RBI has prescribed. It has to be mentioned in that particular format. Third, it has to be explicitly shown across so that it is transparent. And there is also a provision where the customer needs to make sure that they have read through and they have acknowledged it. So these are few things which RBI has said: language, which can be understood by the customer, prescribed format, and third, acknowledgement by the customer stating that they have understood the key factors in this particular loan statement.
Harish, do you think the KFS will reshape the retail and MSME lending sectors in the long term?
Oh, it definitely will, because it will definitely bring down those cases which have been appearing on court regularly. See, the objective is, from RBI's perspective, to reduce those instances. There have been so many instances which have been come up. We've seen articles stating that customers have been mentioning that institutions have taken them for a ride. They didn't know what kind of a contract they were trying to get into. With this particular process in place, both of them would be equally responsible for the contract that they have appeared with.
How AuthBridge is helping MSMEs to adapt to these guidelines?
One of the few things that we noticed was there is a timeline which RBI has mentioned. This is 1st of October 2024, before which they need to really comply. Now, if you understand, like I said, I'm not referring to the established banks. They have already set up the process. But MSMEs, microfinance, they have been given too small a window to actually comply with the RBI guidelines. Keeping that in mind, we have actually developed a process at our end where we will be able to streamline this process for the MSME within 10 days. Now, the objective is to make sure that not only are they complying for RBI, but it will also help them enhance their customer experience, because once customer knows that the MSME or the respective microfinance lender is actually following the norms, it becomes easier for them to sell it more, and there is a greater acceptability for that institution.